Hey, what's going on, everybody? It is Aaron Trevino, and we have a terrific guest here. We have Yonah Weiss from Madison Specs or Specs Madison.
Yes, Madison Specs. Thanks so much,
Madison
Aaron, for
Specs
having me.
from Madison Specs. It's great to see you, Yonah. How's it going?
Doing very well today. Thanks so much. I appreciate you having me on your podcast.
Absolutely. I've always, I know we connected, previously this year, earlier in the spring. And I really liked a lot of your content on LinkedIn, a lot of the little tidbits and strategies that you had to offer people. And I was impressed that, you kind of gave me some more insight on things that I wasn't thinking about. So I'm thrilled to have you as a guest today.
Awesome.
Absolutely. So for those of us who aren't too familiar with you, Yona, could you introduce yourself and tell us a bit more about you?
Absolutely. A little bit about me. I mean, I work for, as you said, a company called Madison Specs, which is the largest national cost segregation company. So my main focus currently is helping people save a tremendous amount of income tax through this specialized service. I got my background in real estate is just over the past 5 years. Before that, I was a teacher. So I spent about 15 years as a teacher. My passion and my love is teaching. I have 6 kids. So, it's all about teaching, it's all about just guiding them. And as you said, you follow me on LinkedIn. I use that platform specifically because it's such an incredible business, platform, professional environment where you can share a lot of content. You can meet people all over the country, all over the world. And so I use that a lot to really just help others. And glad to connect with you over there, and hope to add some value to your listeners today.
Sure, absolutely. So I'm just kind of curious, from going from those 15 years of teaching into, working particularly with people in real estate, was there a moment that kind of made you shift into doing that, or how did you make that transition?
It was kind of a sudden transition. I had some things going on in my life that just kind of showed me I needed to do something else. I needed to do something different, and so I was looking for a change. Although I love teaching, it just where I was at that moment in time, it wasn't a good place, and so I needed to kind of find something outside of that. And I asked around a bunch of my friends, a lot of people, and just put it out there. Hey, looking for something new. What do you suggest? And a lot of them were involved in real estate in different ways. And I was like, okay, some are brokers. Guy was in commercial mortgages. This guy did insurance for real estate. I was like, oh, it's a really interesting field. I knew some people who were investors, people that had done commercial real estate for many years, but I never really been involved. My parents actually owned then and still today own more some single family properties out of state. And it was for me kind of eye-opening to learn the industry. And yeah, it was a pretty big change, a pretty big shift, but I went with open arms to just kind of learn as much as I can.
Okay. So,
Yeah.
kind of that transition you spoke about, you having a few different friends in different facets of the industry. What kind of spoke to you about real estate? What is it about it that's appealing to you?
So it really came down to two things, I think, that really kind of entered my mind. I had spent many years in studying and post collegiate activity, and I was not interested in going back to school whatsoever. So I thought to myself, and I know myself that I learn a lot better on the field. I learn a lot better apprenticing someone, like just learning from others, just hanging around them, learning on the job. So I'm like, I'm number one, I'm not interested in doing any sort of formal education. Some people are saying, oh, I'm going to go back to school and get a degree in this and find another job. No, was not interested in that whatsoever. And the second thing I thought to myself, what kind of profession, what can I do? What kind of field can I go in that does not require any formal education? And I ended up studying and getting my real estate broker's license. And that was, not tremendous amount of work, right? Studying involved in that, but I love learning. Okay. It just the classroom setting was not for me. And the second factor I thought to myself was, what field has the potential to have the maximum potential income. And I had seen from many, friends and acquaintances, and just from studying history, that people make, a vast amount of wealth through real estate. And there's so many opportunities in doing that. So those two factors combined were really what led me to real estate more than anything else.
Sure, absolutely. So if you don't mind me, asking, maybe elaborating more, it is interesting, it's not every day you hear a teacher of 15 years saying that they don't want to, continue with formal education. Could you kind of explain your thoughts on education?
Yeah, well, I love education, love teaching, and I've been a teacher in many different environments, many different surroundings, and I think everyone is really a teacher in life in many different ways, even on a small scale. And I'm a firm believer that whatever you know, whatever you learn, you have the ability to teach that, to share that knowledge with other people, and that's something I love and I'm passionate about. But not necessarily the classroom setting, not necessarily with politics that get involved in school systems, things like that. So my passion is still in teaching, which is incredible because what I've grown into doing, I found my way in different areas of real estate. But what I'm currently doing is really just teaching. Like, that's what I do all day long, because I'm in a business development role in this cost segregation company. But what I found is that it's such an incredible subject that is so confusing to a lot of people, and I'm able to just bring that knowledge to the front, and learned from the experts in the field and work side by side with them. So I have that kind of arsenal of knowledge and experience at my fingertips, and I'm able to use my just abilities to teach that, to share that knowledge with others.
Sure, absolutely. So I know you mentioned that you're doing a lot of business development with Madison Specs, and you're doing cost segregation. Could you kind of elaborate on what cost segregation is and why it's important?
Absolutely. It's a really interesting tool, strategy, a tax strategy for real estate investors that allow them to get more income tax deductions by owning any property. So it's any property besides your personal residence. You have a tax deduction called depreciation, which is allowed by the IRS based on the principle that things go down in value as time goes on. That's what depreciation means. But what ends up happening is it's not really, your property is really not going down in value. You're just allowed to take this write-off, this deduction. And what we do is come in with an engineering component by analyzing a property and breaking down the property into different categories, different components, and taking those deductions at a faster rate. So we're able to front load sometimes 20, 30, 40% of the property into earlier tax deductions. Instead of taking, a little bit every year for a 39-year period, you're able to, front load a whole chunk load of that into the first year or the first 5 years. So essentially what we're doing is, without getting into too many details right now, we're able to create these huge tax deductions, which thereby creates major cash flow for property owners, for investors, allows them to run their business more efficiently.
Sure, absolutely. So you kind of talked about maybe, a longer term period would be over 30 to 40 years, right? Whereas you can do it much, much quicker. Kind of what are the general time periods you're working with when you're working with your clients?
Well, what happens is we have, the IRS breaks up property into different categories that depreciate on different rates. Okay, depreciate means that there's a quote unquote useful life, and they kind of give these arbitrary numbers to things and to every asset, every component of the property. So I'm usually working with people in the early years of ownership. Okay, if they've owned a property in the first year or in the first 5 years of ownership, because that's when you can really take advantage of those tax benefits.
Absolutely. So for someone who maybe has, let's assume they've owned a property for 5 or 10 years, would they not be a decent fit for cost segregation? Is it only that those first 1 or 2 years?
It's usually within the first 5 years is when you're going to get the major tax benefits. And simple reason why that is there are things in the property that depreciate on a 5-year schedule. So let's just give an example. Say you buy a building for $1 million. Okay. Multifamily property, whatever it is, doesn't matter. You're able to either take a little bit of a deduction, okay, about $30,000 per year over a 27.5-year period. Okay, that's how long the IRS says it takes the residential property to depreciate. But that starts the day you buy the property. Okay, and it starts brand new for another person the day they buy it. So it's not intrinsic to the property itself. What happens is there are things in the building like personal property, which are furniture or appliances, carpeting, wall coverings, you name it, so many different things, cabinets, fixtures. All these things, actually, the value of those you can take as a tax deduction in the first 5 years. If you do a cost segregation study, this is what we do essentially. Our engineers come identify what the value of all those different assets are, and now you can take that as a huge, take those tax deductions up front. So if you owned a property for 5 years, okay, you can now go back retroactively and get that amount as a deduction this year. But once you go back further, you've kind of lost out because all of that's already been depreciated. So there's not much more to accelerate, not much to front load. So that's why I say within the first 5 years is usually when it's most beneficial.
Sure, absolutely. So when you mention how your engineers will come in and they'll, basically assign a value to the property, you gave the example of it, just taking $1 million example. Is that different from an appraisal?
It's similar to an appraisal, but it is different, yes, because it's identifying all the different components that the tax code delineates have different depreciation lives. So you have to not only understand what it says in the tax code, and there's a whole cost recovery system, whole breakdown of everything to know what those things are, but it's also, the engineering component, or similar to an appraisal, will come and identify every square footage, every square inch of all of those different assets, and then be able to assign a value to those items, and then create this whole calculation, which will give you this tax deduction. So it is similar that an appraisal will come in and identify that. Appraisals are actually looking at, there's one big difference between an appraisal is when banks are appraising things, they're actually looking at the real useful life of an asset. So they'll come in and say, hey, the roof here, it was replaced 10 years ago. So there's only another 2 years or so of useful life to it, which means they're going to give a lesser value to it, right? But from a cost segregation standpoint, from depreciation, the day you buy the property is the day that depreciation schedule starts. So it's not intrinsic to the building. Even if you bought, the roof, needs to be replaced, but you still get that full value of that roof for depreciation purposes.
Absolutely. So, when you kind of, just kind of looking at the property types, you gave $1 million example of, maybe a building or maybe multifamily property. Are you working, would this pertain to homes or multifamily properties, or what sort of real estate are we looking at?
We're any type of real estate whatsoever, as long as it's not your personal residence, because personal residence you don't get this tax deduction for. But we work with every type of commercial property that's out there. It can be even done for a single family home. The benefits are going to be less because it's relative to the purchase price. Okay, anything over a $500,000 purchase price is going to have significant benefit there. Less than that, it's going to be much less and may not be worth it depending on your situation. But it doesn't matter if it's retail, office, self-storage, you name it, any type of commercial property that's out there.
Okay, very good. So, let's assume I'm wanting to buy potentially a commercial property, right? Maybe I kind of want to consult with you. Should I consult with you beforehand, before purchasing the property, or is it more of, after I realize it'll be a good investment, then I bring you in so you can do the cost segregation within that short time period?
It's a good idea to consult beforehand. before when first of all, to understand it a little better. And second of all, because we provide a free analysis of any property even before you do the full study. So if you're looking to buy a property, you go under contract and you're like, hey, I want to know what my tax benefits are going to be if I end up doing this cost segregation study. How much is it going to cost me, number one, and how much am I going to get back from this? It's a no-brainer just to get that. It's very informative. We'll run that analysis and you can see up front without spending a penny to know what the tax benefits would be. So a lot of people reach out to us before they even buy the property because they want to know what that is so they can take advantage of that in the first year of ownership.
Absolutely. That definitely seems like an important thing to take care of when you're looking to make such a big decision. In terms of, maybe people thinking about rents or cash flow, how would something like this, would it affect, your cash flow at all?
It does affect your cash flow pretty significantly because what we're doing with these deductions is you're basically offsetting any income you're having from your properties. So therefore, you're basically, hopefully, eliminating any tax liability you have, which instead of paying the tax man, you get to keep the money you're making, which is incredible. Instead of paying and deducting from your income beforehand, you get to see how much deductions I have, offset your income, and then hopefully have all that cash flow to reinvest.
Sure, absolutely. I don't know if you're able to say, but is it percentage wise? Like, do most commercial investors or just investors in general, are they familiar with this, or is this kind of a new concept?
I'd say the vast majority of people don't know about this, especially people who are new to the industry or people who have gone from smaller residential properties and moving into commercial or multifamily. I've spent so much time just educating people about this subject, and I find more and more, how come I didn't know about this? Well, how come my accountant didn't tell me about this? And it's funny because even though it's an accounting method, we're doing is depreciation. Your accountant will normally just take what's called straight line depreciation, taking that entire value of the property, spreading that over a 27.5 or 39-year period, and therefore just getting a little bit each year of deductions. What they don't do, or they can't do, is the cost segregation because it requires that engineering component to it. And so that's why you need firms like Madison Specs, like there are a lot of us out there that do this specifically in order to take advantage of this accounting method that accountants don't do. So I'd say a lot of business owners don't know about this as well because this works for business properties as well. People don't necessarily think of themselves, if you own the property that you operate in, if you own a warehouse, right, or you have a factory, or you own a restaurant that you operate there, or let's say you're a doctor or a lawyer or something, you own the office building you operate in. A lot of those people don't necessarily think of themselves as real estate investors. They're business owners that happen to own the property their business operates in. Well, guess what? You get depreciation deductions for your business property as well, and you can do this as well. So I think that's another huge area of people that aren't aware of this.
Yeah, it's interesting you mentioned that. Why do you think that is? If someone is a business owner or a restaurant owner, why do they not by default see themselves also involved in real estate?
Well, I think first and foremost, if you're a business owner, you're operating business, and the property that your business owns, you just kind of think of that as part of the business. Whereas real estate people, their business is buying and selling property. So it is quite different. If you're a doctor and you happen to own the office building you work in, you don't necessarily think of yourself as a landlord, especially if you're occupying the entire space. So there is a big difference to that.
Okay, absolutely. So I know you kind of mentioned the different property types. Are you looking at particular classes, class A, B, or C properties, or is that kind of a factor in getting your services?
No, it applies to any and all types of properties. And like I said, we're the biggest national company, so we're working in all 50 states. Every type of asset class that's out there, any type of property. whether it's new construction or whether it's, new development or, existing properties, you name it.
Okay. Could you maybe, I know you obviously gave a great background on what cost segregation is, but maybe could you run through an example of maybe, you getting in touch with a potential client for the first time, to kind of what your process looks like?
Yeah, absolutely. So like I said, the first and foremost, you want to reach out to get this free estimate. Okay. Because you want to know what your potential tax benefits are going to be. So if you're under contract or you bought a property or you've owned a property for a number of years, you want to reach out to someone like myself and find out, hey, what can I get out of this? So that's the first step. I usually have a conversation and walk them through, maybe through a Zoom, similar to this, and show them the kind of this graphs and charts analysis, breaking down what the difference of benefits would be versus doing regular depreciation, or the accelerated depreciation of cost segregation. Then we send an engineer to the property, either physically or virtually, because now with COVID, we've actually created a virtual tour that we're able to do
Wow.
with our engineers, which is pretty incredible. We've already done probably about 500 of them in the past few months, and it's been a difficult situation for a lot of people, and we've learned to pivot, learned to figure out how we can still operate under the circumstances where there's no travel. Okay. There are people, hands off. No one wants you coming in their properties, right? So yeah,
Wow.
so either virtually or physically, we still do send our engineers physically to the properties when, when it's feasible and necessary. And they come in, take measurements, pictures, video, all kinds of things, create this very detailed report of what's in your property, what all those components are, and that produces a one-page depreciation schedule. So that one page is really, it's a 100-page report, but there's one page in there that really kind of breaks it down all into what this all comes out to be and how this applies to your taxes. That one page is what your accountant then goes and takes and plugs into your tax return, getting you those tax deductions. And that's it. Pretty easy, pretty straightforward. It takes a few weeks to turn around from beginning to end, and pretty hands off.
Okay. So, from the time that report comes out, it gets into the hands of your accountant. It almost just kind of sounds like that's the end of it. And then you're able to, when do you get a response on the deduction?
It's all right in there in the report. So it really is, like I said, a matter of weeks or beginning to end. And that's that one page. You take that into your tax, tax filing. You need to get this done before you file for your taxes, and that hopefully will translate into big tax savings.
Absolutely. Yeah. So it sounds like the idea is, to do something like this, and it not only saves you a lot of money, but kind of how you mentioned before, it also helps your cash flow because you're not having to eat that cost that you could be saving.
100%. And it's tremendous amount of money is left on the table when you think about it. I mean, taxes are probably the number one expense for any person or business owner out there. And there are so many tax, benefits out there for real estate owners specifically. It's incredible. And so this is how, wealthy people, real estate investors specifically, are using the system, using the tax code to pay little to no taxes. And so it's really just about learning it, understanding it, and applying it.
Sure. Absolutely. Could you kind of, could you maybe kind of break down, I guess, taxes and kind of, why you think maybe people aren't as well informed as they should be with taxes?
When it comes to taxes, most people's brains turn off. Okay. I think it's a pretty common theme, right? You talk about taxes, like, okay, I know I have to pay, but I don't understand how it works. And there's all these forms and there's all these different rates and all this. And that's why I have an accountant, and people kind of just push it off to someone else and let them worry about it. I'd say that's the vast majority of people. Whereas the wealthy want to understand it, want to learn how to do it, learn all the different tax deductions, all different tax benefits there are, and then really instruct their accountants to how to do it and how to take advantage of that, or to have really proactive tax advisors who are, understand the system. So it's imperative for us to learn and continue educating ourselves and know how it is that, the tax code is set up in a way to incentivize people for certain actions they take. And so there's a lot of different tax benefits out there. And it's not just about how do I get around it, and certainly not how do I avoid paying taxes illegally. It's actually learning the system and figuring out what I can use to take advantage of it. And a lot of people kind of think of, politicians, Donald Trump, and, the president, and, other people who are big real estate moguls and they're not paying any taxes. Well, guess what? They're doing it legally. It's in the system. They're understanding how to use the system that's there to their advantage, to make money and have that money make more money.
Absolutely. I mean, you kind of answered it there, and you touched on it briefly, but just you had mentioned how the tax code kind of is kind of wanting to encourage or incentivize people to perform certain actions, I guess, in the market. What else is the tax code incentivizing us to do?
Well, it's interested in investing in the economy. And so there are certain things we find, farm owners have different tax benefits. Oil is another, very important thing to the economy. Real estate in particular, all these things, business owners, there are different incentives for people that are contributing to the economy. Self-employed people aren't necessarily considered that they're contributing that much to the economy from the tax code's perspective. So that's why they're taxed at the much higher rate. But real estate is one that is a huge factor, and we cannot overlook that, because housing, besides for food and water, is one of the most basic necessities that people have. And so providing housing, providing places for a business to operate and people to live is extremely important.
Sure, absolutely. You kind of touched on something interesting there, kind of being able to make that sort of housing. Are a lot of the projects that you work on, or I guess the deals that you work on, would this kind of play into potentially like affordable housing?
Yeah, well, there are a lot of different tax credits and things like that for affordable housing as well. So even state and local municipalities are interested in affordable housing for their communities. So this does go along together with it, but it definitely spreads out to other areas of the tax as well, property taxes included, which is not something we deal with, but is another way to kind of help incentivize people to invest in affordable housing.
Sure, absolutely. All right, Yonah. Well, is there anything that you haven't said that you'd really just like to hammer home?
I'd just like to reiterate, it's so important to educate yourself and to listen to podcasts like this and find out more so that you can take advantage, really take your finances into your own hands, and obviously have those advisors and have people on your team that can help you through the process, but don't rely on others to, to educate you. And that's just hammer that home.
Sure. Yeah. If you wouldn't mind, maybe, I mean, obviously I can tell that you do a lot of research, a lot of reading, what do you read on maybe a daily basis, or what do you fill your mind with?
So I fill my mind. Beautiful question. I mean, I listen to podcasts and things like that. I actually study a lot of ancient Jewish texts, the Bible and other things like that, where I get a tremendous amount of knowledge and wisdom from. I'm a big reader as well, and in terms of all kinds of books out there. One book I'm reading, self-development, and other things, finances as well. So tons of books out there. I mean, I've probably read this year alone about 30 or 40 books. So that I could list them off here. But one that I'm reading right now, I'm getting through, which I'm really enjoying, is called Unlocking Greatness by Charlie Harary, Haray. How you spell his last name. So that's just another way just to kind of use your mind and how you think and how you perceive things to bring out tremendous potential.
Sure, absolutely. I'll have to check that one out. I'll put a link in the description there. Just curious as well, what is it about the ancient Jewish texts and the Bible that you find really compelling to use in everyday life?
Well, part of the reason, I mean, I'm a firm believer that they're written with prophecy, and prophecy is godly, and therefore it is really, the lessons in them are timeless. And so even though, maybe it was written a long time ago, it really is very much applicable to, the here and the now. So I live my life by those standards and by those principles and by that wisdom. And so it's number one, connecting with the infinite, connecting with God. And number two, just trying to improve myself and improve the situation of those around me. And that's really what it's all about.
Absolutely. Well said, Yonah. Well, maybe someone's watching, they find what you have to say, really intriguing, compelling. They want to get a hold of you. How do we get in touch? Where can we find you?
Best way to find me is at LinkedIn. I'm very active on that platform, as you know. You can go to yonahweiss.com. So that's my website. It has a lot about my podcast as well, Weiss Advice, as well as cost segregation. You can just check us out there.
Okay. Yeah, I'll make sure to put all that in the description. Yonah, you've been a wonderful guest. I sure learned a heck of a lot, not only about you, cost segregation, taxes, the tax code, and your mindset as well. Really looking forward to speaking to you in the future, and thanks for coming on.
Thank you, Aaron. I appreciate you inviting me, and I hope everyone got a lot of value out of this. Thanks.
Take care.